can put you in a house on a hill, put you in a condo in the city, put you in a mansion.
If you're thinking about buying a home, a townhome, a condo, or even a newer home in a master plan community, this video could save you thousands of dollars. Today, I'm going to share the 5 HOA red flags that you should never ignore. Because here's the reality. A lot of buyers focus on the house itself. They look at the kitchen, they look at the floor plan, they look at the backyard, but they completely forget to investigate the HOA. And unfortunately, that is where some very expensive surprises can show up. We are talking about special assessments, unexpected HOA fee increases, deferred maintenance, insurance issues, and even lawsuits. The good news is that most of these problems leave clues before they become major headaches. So today I'm going to show you exactly what to look for. If you are looking at condos, townhomes, or newer master plan communities, this video is incredibly important. Let's jump in. Red flag number 1, low reserved funds. This is probably the biggest HOA red flag on the entire list. Let's talk about reserved funds. Think of the reserve fund as the HOA's emergency savings account. It's the money they're setting aside for future repairs and replacements. Things like roof, pool equipment, clubhouses, exterior paintings, road repairs, parking lots, landscaping improvements, basically all the expensive stuff. Now, here's where people get into trouble. If the HOA has not been saving enough money and a major repair comes up, somebody still has to pay for it. And guess who that somebody is? You, the homeowner. This is where special assessments come from. Imagine you buy a condo and 6 months later, the HOA discovers every roof in the community needs replacing. The reserve account only has a fraction of the money needed. Suddenly, every homeowner receives a notice saying they owe an additional $5,000, $10,000, and sometimes even more. And yes, I have seen special assessments up to $10,000. Personally, I have not seen more than that. Now, here's another problem. Let's say you're trying to sell your home. You put it on the market and buyers discover there's an active special assessment attached to the property. Do you think they're going to be excited about taking over that extra payment? Probably not. In many cases, the seller ends up paying off the assessment before closing just to get the deal done. So how do you protect yourself? Ask for the reserve study. Ask how much money is currently in the reserves. Ask whether any major projects are planned. And if the reserve account seems low, ask why. Maybe they just completed a major project and spent a large amount of money. That is understandable. Or maybe the HOA has been kicking the can down the road for years and it is not financially healthy. That's a very different conversation. Either way, you need to know before you buy. Red flag number 2. Too many delinquencies. The second red flag is when too many homeowners in the HOA are behind on paying their dues. This is something most buyers never think to ask about, but it can have a huge impact. When homeowners stop paying their HOA dues, the association has less money coming in to maintain the community. That can delay repairs, reduce services, and put more financial pressure on everybody else. On top of that, many lenders have limits on how many owners can be delinquent before financing becomes more difficult. That means fewer qualified buyers when it's time for you to sell. So before you buy, ask how many owners are delinquent and whether the association is financially healthy. Red flag number 3, pending lawsuits. The third red flag is if the HOA is involved in active litigation. Now, not every lawsuit is a deal breaker, but it is something that you absolutely want to understand. For example, if the HOA is suing a contractor over construction defects, that's very different than multiple lawsuits involving financial mismanagement or disputes with homeowners. The reason this matters is because some lenders become much more cautious when an HOA is involved in litigation. And in some situations, financing options can become limited. Make sure you understand what the lawsuit is about, how much money is involved, and whether your lender has any concerns. Number 4, large special assessments or deferred maintenance. Number 4 is one of the most expensive mistakes buyers make. Ask whether there are any current or upcoming special assessments. A special assessment is essentially an extra bill sent to homeowners when the HOA doesn't have enough money in reserves to cover a major repair. That could be roofs, siding, parking lots, elevators, pools, or other large community expenses. I've seen special assessments range from a few $100s to tens of thousands of dollars per owner. Even if there isn't a special assessment today, look around the community. Do the buildings look maintained? Are the roads, roofs, paint, landscaping, and common areas being cared for? Deferred maintenance today often turns into expensive assessments tomorrow. Red flag number 5, HOA rules that don't fit your lifestyle. The last red flag is not necessarily financial, but it can definitely affect your happiness. Every HOA has its own rules. Some limit pets. Some restrict parking. Some prohibit work trucks, RVs, trailers, or boats. Others have strict rental restrictions that could affect you if you ever want to turn the home into a rental property. Some even regulate things like exterior paint colors, holiday decorations, fencing, or landscaping. The point is not that these rules are bad. The point is that you should know what you are agreeing to before you buy. Read the governing documents and make sure the community fits the way you actually live. Buying a home in an HOA is not automatically a bad thing. In fact, many HOAs are run very well and help protect property values. For example, here in Highlands Ranch, Colorado, it is one of the largest HOA communities in the country, and the master HOA is currently just under $60 per month while offering 4 recreation center pools, fitness facilities, parks, trails, and community events. Some neighborhoods do have a second neighborhood HOA, so it's always important to understand exactly what you're paying for. The key is doing your homework before you buy. If you are in Colorado, I would love to help you review HOA documents before you make an offer. And if you're outside Colorado, I can connect you with a trusted real estate agent who works the same way I do. So just click the link below, fill out the short form, and I'll personally reach out to you within 24 hours to help you get started. I hope to talk to you soon.
I can put you in a house on a hill, put you in a condo in the city.